Hello, my name is Rachel McLone, the Learning and Development Manager at British University Finance Directors Group. This is one of a series of videos exploring global mobility in higher education and the associated framework initiated by the Northwestern University's Purchasing Consortium. I'm joined by Marie Green, the Global Mobility Education Lead for PwC, to discuss the tax implications of global mobility, including personal taxation and social security. So, Marie, why is it important to consider tax in the context of global mobility?
Rachel, increasingly in the sector, we're seeing a rise in internationally mobile employees, from visiting professors to joint ventures with overseas universities. Where someone works and lives in one country, their tax position, and by that we mean normally income tax and social security, but sometimes other taxes too, such as wealth tax, is relatively simple. However, where you have cross jurisdictions in terms of where you live and where you work, that becomes complex. And therefore it's important for the university to understand where those liabilities will lie and what will that mean for the individual.
Okay, thank you. You mentioned there about being internationally mobile can also impact your social security position. Why is this the case?
So, somewhat frustratingly, I guess, the rules around income tax and social security are not the same. And therefore you can find an individual who pays income tax in one country but social security in another. Not only that, it's worth noting that employers as well as employees pay social security, and therefore the rates vary between different countries, so understanding as a university where the liability is will impact your cost. One recent example, I've been working with a UK university where they have discovered that a number of their UK employees are working predominantly at home, where home is not the UK. And they've incurred a significant amount of additional costs of social security in settling that in these other territories. Finally, the benefit provision under different social security regimes is different, and therefore understanding what your employees are entitled to is important.
Okay, thank you, very clear. So Marie, as well, in addition to the unexpected cost for the employer or the employee, are there any other potential consequences from this?
Yeah, international mobility tends to have 3 or 4 key consequences to consider. Firstly, there may be a payroll or reporting obligation in another territory. And understanding and managing this is important, and that's discussed in more detail in Lot 3. The second thing is around operational and ensuring that you're able to operate. There's been a number of stories recently whereby individuals not having the right social security documentation across Europe have been not permitted to operate in a country because of the lack of this. And finally, the reputational risk of getting it wrong can, for example, we've seen in the higher education sector, lead to reduction in student numbers from that territory.
Goodness, okay, so then what would the benefits be of using a framework for the university?
So the framework allows you to get some comprehensive advice from individuals that specialise in the sector, so understand key things which are specific to the sector, such as the teacher's article, and enable you to get consistent advice across the sector.
Okay, great. That's been really helpful, Marie. Thank you very much. So if you would like more information and guidance on the framework, please go to your Regional Purchasing Consortium website or see the PwC website for their guide on global mobility issues in higher education.